Good morning, everybody. This is Scott Sion, your stonk trader. And yes, folks, it seems like Mr. Ken Griffin, CEO of Citadel, definitely has his tit in the ringer. Give me just 1 minute, folks. Let's get some people in here. And I'm going to go ahead and share this over on the on my Twitter page. Just give me a second here. Let's get some folks in here. Ken Griffin. We'll just copy that. Yeah, old Kenny G, boy, he's got himself, I think he's got himself in some real trouble that will be brewing over the next several months. No doubt about it. But let's just get some folks in here and we'll go ahead and continue. There's some juicy tidbits of information in the news we're going to go ahead and cover, but let's go ahead and get this on Twitter. Alrighty. Yeah, old Kenny G. He's got himself in some trouble here, boy. Anyways, folks, I don't live stream that much on this YouTube channel. I just started it not too long ago. I have some other YouTube channels, and let me go ahead and just get this this live chat set up. And we'll go from there. Okay, anyways, on Bloomberg yesterday, just scroll up here, Robinhood, GameStop, Ken Griffin, you know, and this does pertain to AMC also, naturally. And I am heavily vested in AMC. And at one point in time, I was also heavily vested in GameStop. When the GameStop saga was playing out, the short squeeze, I decided to jump in on that. I was able to grab a pretty good position, and once the squeeze went down, I don't know, there was just something inside of me, an intuition, call it what you may, that was telling me to jump out. I jumped out at $328 and left some money on the table, but hey, you know, in stock trading, shit happens. But as far as what we're going through right now with AMC, you know, I've been trying to, teach and tell and expose to all of the ape community what exactly is going on with AMC. You know, GameStop right now, I really don't think that GameStop's going to squeeze again anytime soon. But right now, I'm heavily vested in AMC, and it has been since January. And how I got into AMC was, you know, during the scamdemic, I was looking for companies that were going to be affected by the pandemic. And some of the first companies I was looking for were like restaurant companies that were going to be affected because of the shutdown. And, I knew about AMC. I wasn't too fired up about it at the time. And then all of a sudden, I saw their stock crashing. And once I saw that, well, that was it. I said, okay, you know what? Eventually people are going to go back to the movies. And, at one point in time, before AMC was getting run into the ground by this, the shorting from hedge funds, I thought, okay, well, it should be able to make its way back up to maybe, 19, 20, 21, maybe even $25 per share. So I jumped in. I got in at $1.98 per share. And, I did pull the trigger for myself on a very, very large deal. Simply because, again, I thought that in the very near future, AMC would recover, people would go back to the movies, and so on and so forth. And then, I start discovering all of the shenanigans behind AMC, and, just the same thing with GameStop, and battling these hedge funds and the shorting and the naked shorting. But anyways, the situation that we're in right now with AMC is it's hot. Let's just put it that way. It's pretty damn hot. Anywho, a lot of you will get to know me, if you're jumping on board here in the live chat coming up. Make sure you subscribe to this YouTube channel, set your notifications, and now pretty soon I'm going to start live streaming every morning for pre-market, and we can take a look at a lot of things that are transpiring with AMC, and if things pop up with GameStop, sure enough, I'll cover those. I also study high frequency trading algorithms, and I have a program that I've been working with for some time now, and it allows me to follow these high frequency trading algorithms and also the dark pool algorithms in real time. And we'll get to that pretty soon, but it does allow me to catch an edge when I am doing my regular day trading or investing. But let's take a look. I'll just give me 1 second here. All right, we got that in there. Okay. Yeah, and as you can see, this headline, Ken Griffin. Let me bounce back to it. Ken Griffin, Robinhood strikes back at fresh. Ooh, excuse me. let's start this over again. Ken Griffin, Robinhood strike back at fresh outrage over GameStop. This has been brewing for some time. There's a lawsuit currently in the works right now with Citadel, Robinhood, I believe also Melvin Capital. And getting down into this article from Bloomberg, and I would have posted this article yesterday. However, with Bloomberg, you have to have a subscription. I do have a subscription, so I will go ahead and read this out for you guys. Robinhood Markets Incorporated and Citadel Securities responded to renewed criticism of their actions during January's meme stock frenzy after retail investors filed a class action lawsuit last week. Citadel Securities, whose founder, Ken Griffin, testified about the episode during a February congressional hearing, fired off a series of tweets late Monday denying allegations that it pressured Robinhood to restrict trading. Robinhood, led by Chief Executive Officer Vlad Tenev, said in an email statement Tuesday that the lawsuit paints a false narrative of collusion with Citadel Securities. Well, look, folks, let's just take this first paragraph here, and I don't know what Vlad is smoking, but these emails that were just leaked out internally, well, it does show collusion, or at least the appearance of. And I've had my thoughts about Robinhood, where Robinhood came from, Citadel's position in Robinhood. So let's just speculate. Let's just put this out there. So Citadel is a market maker, and Citadel is also a hedge fund. Citadel is just about every damn thing there is in the investment world. Citadel has tentacles throughout Wall Street and abroad. So, where did Robinhood come from? What a great market to tap into would be the retail investors. Gamify an app for cell phone usage for retail investors. Make it easy, make it inexpensive, and bring in that new money. Maybe, just maybe, Citadel was kind of maybe secretly behind the inception of Robinhood, because how would Robinhood make money? Think about it. So Robinhood would have to find a market maker to put their orders through to fulfill the stock purchases, and the payment for order flow, well, that is a big deal. So, naturally they team up with Citadel. But when you're opening up this investment company, this financial entity, Robinhood, and you don't already have some deals in place where you're going to make millions and millions and millions of dollars, you're not going to make it on your customers. You're going to make it on the payment for order flow. So that makes me kind of wonder, okay, did Robinhood, kind of have this deal set up with Citadel before they launched their app and sucked in all of the retail traders? So, just think about that. They're starting to call all of us conspiracy theorists, but, if you kind of take a look at all of the conspiracies in the past, well, eventually a very large percentage of those conspiracies turn into reality. And I think that's what we're actually seeing right now. I actually think we're seeing what some think is a conspiracy theory. I think we're seeing it turn into reality. So getting back to this article, I'll go ahead and run this down. It said, Griffin added a statement of his own on Tuesday. I must frustrate the conspiracy theorists to no end that Vlad and I have never texted, called, or met each other. But I must say kudos to Vlad and his team at Robinhood for their remarkable success story. Look, Ken Griffin is a very, very smart man. He was a little entrepreneur as a young man and a teenager. Very, very smart. Developed his skills. He was a quant himself, a quant analyst. Worked his way up. And he was pretty ruthless and still is to this day. He's actually become much, much worse. And, I posted a video yesterday that was a little bit of a background in Ken Griffin. I posted it on my Twitter page, and the links for my Discord and also for Twitter are in the description box under the video. You guys can check those out on the Twitter page, and I try to post as much info on Twitter as possible. So getting back to this information, this article in Bloomberg, and this was just dropped yesterday. It states that plaintiffs in the lawsuit allege that Citadel Securities amassed a substantial short position in GameStop Corp. and other stocks that exploded in value, and that the market makers pressured Robinhood to stop customers from purchasing those shares, which the online brokerage did on January 28th, referring to Robinhood. Well, Robinhood was instructed to do that. Okay? We're not dummies here. Robinhood was instructed to do that by Citadel. Okay? I mean, I can just see it in my mind. They're not going to put forth a bunch of electronic communications, email, where people from Citadel are demanding and telling in plain English language, hey, Robinhood, shut off the buy button. Only let these people sell. Well, during that period of time when that buy button was shut off at Robinhood, well, there were institutions that were still buying. Why were they not shut off? Has anybody really ever answered that question? Has anybody asked that question? Have we ever got answers to those questions? Hell no. Let's move on with the article here. It says both firms have pushed back against the notion that Citadel Securities directed the brokerage to restrict purchases. Robinhood has said it faced a large demand for collateral from a central clearinghouse and scrambled to raise more than $3 billion in additional capital in the following days. We will work vigorously to continue correcting the record with the facts, Robinhood said in its statement on Tuesday. The firm's securities unit was communicating with market makers in an effort to ensure continued market access for our customers. Well, come on. Right there, that's a line of bullshit. That's complete bullshit. They were in a line of communications with market makers, and they should just make that singular. They were in direct communications with Citadel. Citadel was up in arms. Robinhood was losing their ass. Citadel was losing their ass. And here comes Melvin Capital. Gabe Plotkin, he was short on GameStop for quite a while. Okay, now these younger guys, these younger hedge fund managers and CEOs, they're kind of like the minions of Citadel. Okay, so I can clearly see where Plotkin and Vlad Tenev all come into play. Okay, they want to be the minions of Citadel. They know that they could make money with and under Citadel. Okay, and Citadel's tentacles reach very far. They reach around the entire freaking world. Okay, so I believe one figure came out, oh my God, what was it? Payment for order flow, I don't know if it was 2020, jumped substantially with Robinhood. I forget the millions and millions and millions of dollars. I forget the figure that was out there. I could probably dig it up, but that allows, when Robinhood sends their orders to the market maker, which is Citadel, that allows Citadel's hedge fund to front run those orders. So, folks, you see all of these people on YouTube that make these Robinhood videos claiming that, they're making hundreds of thousands of dollars on Robinhood. Okay, that may be a few people, but the majority of people on Robinhood tend to lose money. So let's just think about it mathematically. If 1 million people lose $500 that they put into their Robinhood account, and they purchased some stock, and that order goes to Citadel. Citadel, as a market maker, can easily take that data, compute it very, very quickly within milliseconds, and then send the information to the Citadel hedge fund and front run all of the orders. It is that simple. So will we ever know if that happens? Well, we don't really have to know. It has to happen. I mean, you're talking about greed here, and technology, and being, one of the biggest market makers in the industry, and kind of the most feared from what I'm understanding. So Citadel Security started tweeting their asses off yesterday, defending themselves, defending Ken Griffin. And that I found very, very unusual, because Citadel's Twitter page has been kind of, dormant. They really haven't said anything about this whole situation on Twitter until yesterday. And it says Citadel Securities also tweeted a rebuttal to the accusation that Griffin lied to lawmakers when asked whether Citadel Securities requested that Robinhood restrict trading. Ken Griffin truthfully told Congress, "Let me be perfectly clear. Absolutely not." And you can see the actual tweet right here, 7:16 p.m., September 27th. The saga has drawn attention to the complex machinery behind the execution of trades. Robinhood sends customer orders to Citadel Security and other trading firms to be carried out, and accepts remuneration from those firms in what's called payment for order flow. Okay, so we've all discussed that over and over again. While other retail brokerages such as Charles Schwab also use such arrangements, it's particularly important to Robinhood, comprising about 3/4 of its revenue last year and 80% in the first half of 2021. Filings do show. Payment for order flow, which critics have said poses potential conflicts of interest, faces fresh scrutiny from Security and Exchange Commission Chairperson Gary Gensler, who has said that a ban on payment for order flow is possible. Personally, folks, I don't think that's going to happen. Last week, Scion Asset Management Michael Burry said he received a subpoena from the SEC as part of the investigation into the meme stock madness. I don't know what they want Michael Burry for. I think they may want him possibly for his advice because he closed out his position in GameStop way before the squeeze even occurred. it says continued. Separately, Tenev defended his firm's business model in a Wall Street Journal op-ed on Tuesday. Payment for order flow, he wrote, allows the company to offer commission-free trades with no account minimums, which has helped a new generation of retail investors get started. That was coming from Tenev. Vlad. Well, of course, he's not going to just come out there and say, oh, yeah, we send these orders over to Citadel. They pay us millions of dollars, and then they make millions of dollars by front-running the orders. The article goes on to state that banning the practice, he said, is unlikely to help retail investors get better prices and would likely reerect barriers that keep so many out of the market. Addressing criticisms that Robinhood lures inexperienced investors with game-like tactics to keep them trading more, he wrote, investing isn't a game, but must it be grim and difficult to understand? Well, of course, when you're using an app, Robinhood's app is pretty easy to use compared to some of the other ones that I've seen from some of the other investment companies. It is kind of gamified, but if you are attracting new investors in the retail market that aren't that experienced, well, I could see their point. The payment for order flow is a problem. It is a problem when you're sending that data to a market maker who is also a hedge fund. So you can see how easy it is, or could be, to front run all of that data, all of those trades, and make millions. And those millions turn into billions. Simple as that. So that was the big headline on Bloomberg yesterday. Ken Griffin, Robinhood strike back at fresh outrage over GameStop. Same thing's going to happen with AMC. The issue with AMC is this is a much, much bigger deal than GameStop. There's a lot more money on the table. There's a lot more people invested. And the potential for some of these companies and hedge funds to go bankrupt immediately, well, it's a very, very high percentage. We know all about the naked shorting. Okay, the synthetic shares is really the synthetic shares. It's kind of the wrong word to use. It really doesn't apply. I don't even know where that synthetic shares terminology came up, folks. But the naked shorting, look, that's something that's been going on for decades and decades in the markets. The DTCC, they can stop it immediately by simply, calling out these hedge funds on their short positions when they're borrowing shares. Okay. And, that all goes into the FTDs. And I don't want to get it real technical with you guys, but, when you're naked shorting, okay, at the close of business, you better have those shares. Okay. If you don't have the shares, the DTCC simply would say, hey, at the close of business, you better have those shares. If you don't have those shares, we are reversing those orders. That's pretty much how it works. That's how basic it is, but they don't enforce it. There are also several gray areas referred to as loopholes that Citadel uses. Okay, and again, that's just a bunch of really technical stuff, but It's the law. It is a federal regulation, but they are able to get around it. And one day we'll go into that because it's quite interesting. There are several other articles that came out at the beginning of this year. This one right here is on Wall Street on Parade. And the headline on this article was Citadel didn't just bail out a GameStop short seller. Citadel also had a big short position in GameStop also. So, there's that whole backroom deal type situation that went on between Citadel and Melvin Capital because Melvin Capital was about to lose their ass. Gabe Plotkin, CEO, founder of Melvin Capital, he knew it. He knew once the situation started heating up with GameStop, all of their short positions, they were going to get their asses handed to them, and that would mean bankruptcy. So in the midst of all of the GameStop saga, they got themselves in some big trouble, meaning Melvin Capital, and Robinhood was also in some trouble. And who came to their rescue? So earlier on, I was saying, isn't it kind of ironic how Robinhood comes out of nowhere, gets itself set up, becomes very successful, they're making money, Citadel is in the picture, Citadel is paying them for their payment for order flow, making millions. Citadel, as a hedge fund, front runs those orders. They make millions. Melvin Capital, again, these are like, younger guys. I feel that these younger guys, Melvin Capital, Gabe Plotkin, Vlad Tenev, Robinhood, these are like Ken Griffin's minions. And he protected both of them. He protected both of them like they were his damn kids. But I think one thing that all of them are forgetting is the increasing power of the retail investor with communication that is so easy, meaning Twitter, Reddit, Discord, Facebook, YouTube. So people are able to kind of band together, discuss, stocks, trades, things of that nature. And they blame Reddit, they blame Wall Street Bets for colluding and concocting this run on GameStop that was being heavily shorted by a multitude of hedge funds. One thing they failed to take into consideration as a massive variable was the retail investor. All of these people coming together, bringing in hundreds of millions of dollars and dropping the hammer on their short positions. Meaning, in the beginning, somebody with some investment brains saw that GameStop was being heavily shorted, called in the reinforcements, which would be retail traders, and kind of, ran up the price and put a squeeze into effect. It's not the first time it's happened. Happens all the time. Short sellers get their asses handed to them all the time. because they think they have all of the financial power, and they can keep shorting a stock till they drive it into fucking bankruptcy. Well, that didn't happen with GameStop, and it sure as hell isn't going to happen with AMC either. So Citadel at this point in time is pivoting. They're pivoting on just complete implosion and disaster. And they know it. What's going to happen? I mean, it's going to be one hell of a spectacle. And after it plays out, there'll probably be more congressional hearings, and there'll be more drama. Yeah, but we all get paid. We better get paid. And maybe there will be some adjustments with the SEC in the very near future. I don't think that anything is going to come about right now, right in the midst of all of this. Then you got this wacko President Biden destroying the United States economy, destroying this country, period. So that's also playing a factor. There was another piece here on Wall Street on parade. GameStop short squeeze. These are the big Wall Street players who stood to make billions. And this is a very, very revealing article. I'm not going to read all of this to you guys. I will post links for these articles in the comment section under this video after I'm done. And I will also post them on my Twitter page. Again, link for Twitter and Discord is in the description box under this video. So make sure you guys subscribe to this channel. I'm going to start uncovering a lot more, and we'll be doing some pre-market. And look, I've been a stock investor and day trader, very experienced for more than 25 years. So I definitely know what I'm talking about. I do take risks from time to time, but nothing very, very heavy. Won't be giving out any financial advice or anything of that nature, but hey, you could read between the lines. There was another article here that was kind of caught my eye, and this one goes all the way back to September 25th, 2020. And this talks about the last week of March and the pandemic, and Citadel, when they had to close their Chicago and New York offices, they literally had to abandon their offices. They already had something set up at the Four Seasons in Palm Beach in Florida, and they kept on doing business. No problem. So again, this article goes into that and talks about that, and that's to me that's another mysterious part of this whole saga. It's like Citadel had some inside information on the looming shutdown. And in order to protect themselves, well, they pre-planned and kind of had their bunker in Palm Beach all set up. Didn't miss a beat. This little graph here talks about, it's labeled Lockdown Leap. And this is a graph talking about Citadel Securities revenue through the first half of 2020. Okay, and it states it's already an annual record. So that was back in 2020. And you could see 2017 to 2018, 2019, and then boom, here we go. So they were definitely ready for the scamdemic, and they took advantage of it, and they did very, very well. So I will go ahead and post that also. There was something I wanted you guys to see, and This this is a video from February 18th, 2021. There you can see Mr. Stone-faced Ken Griffin. But what you're going to be listening to is you're going to be listening to Gabe Plotkin, CEO of Melvin Capital. And one thing that I did do in my career, and I was an advertising executive for a Fortune 500 company for 22 years. Very, very high level, very, very successful. One thing that I did learn very early on, fresh out of college, was to understand and learn body language and how to read it. Because back then, the majority of business that I was out there conducting for the company was face-to-face presentations, things of that nature, and I had to be able to read my client. And I got very, very good at it. And I studied the psychology of sales and so on and so forth. So one of the first things that I noticed when I watched this testimony, this opening statement of Mr. Plotkin, man, he may be a smart guy behind a computer and a calculator, but he's not a good liar. Now, Ken Griffin, well, that's a different story. Ken he's just like a robot. He reminds me of Mark Zuckerberg, okay? Kind of robotic, eyes wide open, very stone-faced, doesn't really show too much emotion. Excuse me. But, excuse me. I want you guys to look at this and watch this this opening statement of Gabe Plotkin, Melvin Capital, and I'll point out these body language indicators. So it does start off with Mr. Stoneface, but we're going to hear from Mr. Plotkin. Let's check this out.
Plotkin, you're now recognized for 5 minutes to present your oral testimony.
Chairwoman Waters, Ranking Member McHenry, and members of the committee, I would like to thank you for this opportunity to share Melvin Capital's perspective on the recent trading activity in GameStop. I am the founder and chief investment officer of Melvin Capital. I'm humbled by these unprecedented events. Many investors on all sides have experienced losses. I am here today to share my own personal experience and to be helpful in this conversation. I understand that part of the focus of this hearing is the decision of stock trading platforms to limit trading in GameStop. I want to make clear at the outset that Melvin Capital played absolutely no role in those trading platform decisions. In fact, Melvin closed out all of its positions in GameStop days before the platforms put those limitations in place. Like you, we learned about those limits from news reports. I also want to make clear at the outset that contrary to many reports, Melvin Capital was not bailed out in the midst of these events. Citadel proactively reached out to become a new investor, similar to the investments others make in our funds. It was not.
Okay, look, folks, right there, you can see Mr. Plotkin's opening statement is rehearsed. It is written down. He is reading it from a computer screen. It was probably written for him, just similar to a damn politician. And you can see that he's uncomfortable. He's very, very uncomfortable. And you can see the kind of smirk on his face when he states that we weren't bailed out. We weren't bailed out. Citadel invested in Melvin Capital. Well, that's a blatant lie. But anyways, Let's let Gabriel Plotkin continue.
Opportunity for Citadel to buy low and earn returns for its investors if and when our fund's value went up. To be sure, Melvin was managing through a difficult time, but we always had margin excess and we were not seeking a cash infusion. I'm here testifying today far removed from my background. I grew up in a middle-class family in Portland, Maine. I went to a public high school. I studied hard and got into a good college. Upon graduation, I did not have a job. Today, I'm married with 4 children, and my time is spent with my family and on Melvin Capital, which I founded 6 years ago. I named Melvin after my grandfather, who ran a convenience store. I wanted the firm to represent his values, integrity, hard work, taking care of customers and employees, and commitment to excellence. Melvin Capital manages a hedge fund. Investors such as academic institutions, medical research and other charitable foundations, pension funds, retirees, and others invest with us. We have 36 employees and hundreds of investors, and I feel a personal duty to all of them. Melvin specializes in the consumer and technology sector, including companies like GameStop, AutoZone, and Expedia. Most of our investments are long. In other words, we buy stock in companies that create jobs, grow the economy, and develop new products for consumers. We do this after extensive fundamental research, sometimes literally for years. When our research convinces us that a company will grow relative to expectations, we make a long-term investment. When our research suggests a company will not live up to expectations and its stock price is overvalued, we might short a stock. Like with our long positions, our practice is to short a stock for the long term after extensive research. We also short stocks because when the markets go down, we have a duty to protect our investors' capital. There are laws governing shorting stock, and of course, we always follow them. In addition, it's very important to understand that absolutely none of Melvin's short positions are part of any effort to artificially depress or manipulate downward the price of a stock. Nothing about our short position prevents a company from achieving its objectives. It is just Melvin's view about whether it will. Specific to GameStop, we had a research-supported view well before the recent events. In fact, we had been short GameStop since Melvin's inception 6 years earlier, because we believed and still believe that its business model, selling new and used video games in physical stores, is being overtaken by digital downloads through the internet. And that trend only accelerated in 2020 when, because of the pandemic, people were downloading video games at home. As a result, the gaming industry had its best year ever, but GameStop had significant losses. In January 2021, a group on Reddit began to make posts about Melvin's specific investments. They took information contained in our SEC filings and encouraged others to trade in the opposite direction. Many of these posts were laced with anti-Semitic slurs directed at me and others. The posts said things like, "It's very clear we need a second Holocaust. The Jews can't keep getting away with this." Others sent similarly profane and racist text messages to me. In the frenzy during January, GameStop stock rose from $17 to a peak of $483. I do not think anyone would claim that the price had any relationship to the intrinsic value of the business. The unfortunate part of this episode is that ordinary investors who were convinced by a misleading frenzy to buy GameStop at $100, $200, or even $483 have now lost significant amounts. When this frenzy began, Melvin started closing out its position in GameStop at a loss. Not because our investment thesis had changed, but because something unprecedented was happening.
Now, folks, did you see that little smirk again on his face? Okay, it's burning his ass deep down inside because his company shorted GameStop and they were trying to short the company into the ground. Okay, he got his ass handed to him by retail investors. He blames Reddit. He had to bring up the slurs, about Jews, and people were texting him and this and that. And poor little Mr. Plotkin, he was taking the heat. And now he's crying like a little bitch. And this is his congressional testimony. And again, this is a written script that he's reading from. You can clearly see that. If this was me, and I was in Plotkin's seat right now, the last damn thing that I would be doing is reading some hokey ass opening statement. I would go straight from the heart. But this guy is trying to cover things up. You can see the stress in his face. And he knows that he is in way over his head. And his statement about Citadel not bailing them out, but investing in their company. Listen, come on. Who in the hell would invest $3 billion in a hedge fund company that is at the moment losing their ass and about to go bankrupt and belly up? So you can clearly see outlined in fluorescent pink, Citadel bailed them out for a reason. And that is because Plotkin and Vlad Tenev are two little minions of Citadel. That much is a fact. That's the way I see it. That's the way it all played out. But let's listen to a little bit more of the crybaby here.
We also reduced many other Melvin positions at significant losses, both long and short, that were the subject of similar posts. I'm personally humbled by what happened in January. Investors in Melvin suffered significant losses. It is now our job to earn it back. And while I do not think that anyone could have anticipated these events, I've learned much from them, and I'm taking steps to protect our investors from anything like this happening in the future. I look forward to answering your questions.
Okay, well, the only reason why their investors didn't lose a shitload of money is because Citadel, Mr. Kenny Griffin, he stepped in and gave them $3 billion. To me, that kind of sounds like hush money. You shut your mouth, you take this $3 billion, we'll bail you out, but we're going to have to do it the legal way. So it's going to have to look like an investment. So, I mean, you could easily see how the backdoor deals work. And I think more and more of this is going to come out in the very, very near future. There was another video that I watched. This had to do with oh no, that was the same one. Okay, there's one more. This right here, this is this is Citadel CEO Ken Griffin on whether the markets are fair to retail traders. And you could see how uneasy the reporter is from CNBC when he is talking to Kenny Griffin. So let's check this out. This is a little comical.
I have a question about all of this, which is, do you believe that the markets unto themselves are completely fair? And when I say fair, do you believe that my mother has the same opportunity to make money in the market as you do?
So it all comes down to a matter of horizon and strategy. It's like asking, if I went and played golf this weekend with Tiger Woods, would I win? Of course not. But there are various ways to compete with Tiger Woods off a golf course and do very well. I'm not going to play him on his game, on his course. Your grandmother might be very aware of a sea change in technology or otherwise that will impact our economy. She might look at the car you drive 5 years and go, Andrew bought a Tesla. And I think EVs are the future of America, and I'm going to buy Tesla stock. And if she'd bought Tesla stock 5 years ago, she would have made a lot more money than we made at Citadel. So I never underestimate the skill of the American retail investor at understanding emerging trends where real wealth is created and their ability to take advantage of that wealth transformation.
Shepard Smith.
Folks, I I had to watch this clip a couple of times because I just thought it was just completely comical. Ken Griffin never answered the question up front in plain terminology. Nope. He danced around it. He used an analogy, and he never answered the damn question. And you could see the reporter there at CNBC, I could only imagine what was going through his mind, thinking to himself, damn, all this guy had to do was just answer the question, yes or no. He goes into this whole spiel about a grandmother and a Tesla and electric cars and a golf course and Tiger Woods. I mean, that's all just dancing around the initial question. We see politicians do it every single day. So, Kenny G is no different than a politician. I would consider all of them in the same type of category. They're all pretty much a bunch of liars. But anyways, enough with the YouTube stuff. And these articles that I have here, I'll post those on Twitter, and also I'll put the links in the description box under this video. There's something that I want to show you guys, okay? This is the program that I use to watch the dark pool data in real time, and also the high frequency trading data and algorithms in real time. So right now, this is AMC, and the blue is the price line, candles, and the yellow line, this will represent the high frequency trading algorithms, and this is called machine trading. And machine trading, it rules Wall Street. Well, let's just say this. It rules the financial markets around the world, and has been since 2008, 9, 10, 2011, 2012. The technology really started to pick up, and things really started to change in the markets. These high frequency trading algorithms and supercomputers and servers, they trade these stocks back and forth in milliseconds. Okay, absolutely, the retail trader is of no competition. Okay, what I do is I go with the flow, literally price flow, and I trade accordingly. I don't try to trade against what's happening. I trade with it. Okay, and that's kind of rule number one. But we're going to replay this. Now, I have a replay feature on this program, and it cost me $200 a month. But since I've been using it, it has made my trading so accurate and much easier. And I'm at like 100% since using this application. So what I'm going to point out today, and this is yesterday's flow with AMC, and you are going to see the yellow indicator is the high frequency trading algorithms that are used. And yesterday, and it has been for the last couple of weeks, it is being used with the dark pool to control and push down AMC. Okay, 2 weeks ago we were trading up in the 50s. At the point of 52.79, at that point on the 13th of September, they decided enough is enough. We need to push this stock down deep into the 30s. And that's exactly what they did, and that's exactly what has happened. So we're going to go ahead and replay this. and follow my cursor over here, lower right hand corner, you see the yellow date. This is when yesterday started, right there. So the high frequency trading algorithm gave itself a pretty big boost. And if you watch it very carefully, I'll move my cursor out of the way. If you watch it very, very carefully and watch the blue line, which are the candles, and that's the normal pricing that you're seeing on your charts, on your computers and your cell phones, and you will see how closely the high frequency trading algorithm is controlling the price line. There are no new orders of AMC purchases, stock purchases, hitting the lit market. They're all going into the dark pool. Why? Because that would interfere with the algorithm. The algorithm will spot those purchases of stock, and then it will follow that trend. So they don't want the high frequency trading algorithms to spot all of these incoming purchases, all of this incoming volume, because the algorithms are trained that way. That is the way they are programmed. Okay? These algorithms do use artificial intelligence to learn. And what they're learning is what other algorithms are doing and what the market is doing. If the market is going up and the algorithm sees that upward trend, it will start to buy that stock instantaneously, blink of an eye. Okay, so if you do not want that interference, then you have to remove the volume, the buying pressure. You have to remove it. You have to get it out of the, let's just say, out of the eyesight of the algorithm. If you do not, the algorithm will follow that buying pressure and it will automatically start buying the AMC stock, and you will see the price shoot up. And that's something that they don't want to happen. They are also shorting the stock continuously on top of using the algorithm to drive it down. Now, as we've taken a look at the high frequency trading algorithm, we're going to click over here and we're going to take a look at the dark pool trading algorithm. Okay. Now, yesterday, the dark pool trading algorithm ruled AMC 100%. Okay. We could replay this also, and that's exactly what we're going to do. Lower right hand corner, you could see the date right down here in yellow. You could see the very, very large spike to start the day off, and the algorithm is kicking in. Now, the pink line is the dark pool data algorithm. The blue line naturally are the candles, and that's the regular price line. You can clearly see, once again, the dark pool algorithm really took charge yesterday in pushing the price of AMC down. Okay. Dark pool percentage, I do believe, was somewhere around 60%. It may have been higher. But again, all of that incoming volume into AMC was suppressed, pushed into the dark pool, and then that will be used against us today in today's price action. So I don't have an exact figure on what that suppressed volume is, but that suppressed volume will be leaked out into the price action today. So that is their MO. That is their method of operation. Okay, so you can see, I mean, this is clear as a bell to me. One of the main reasons why I use this program is I use it for actual trading, because it helps me stay about well, maybe anywhere from 45 seconds to 3 minutes ahead of the price action, because I can see where the algorithms are going. Okay. And that little bit of time is the edge that I need in order to make a decision, whether to get into a trade or get out of a trade. And that's what this program is for. As of lately, I haven't been doing very much day trading, except a little bit here and there. But because I have a lot of money wrapped up in AMC. And that's taken a massive, massive chunk out of my trading money. But I've been using this program to track the fuckery in this stock. And I've been posting the replay videos and also some charting on my Twitter page to show people as we're going through the day with AMC. I am showing them clear as a bell with chart posts on my Twitter page to show them, look, this is what's happening. Okay, so all of the technical analysis, it's kind of out the door. And, if you listen to these YouTubers, it's the same repetitive bullshit that you're going to hear day after day after day after day about AMC and GameStop, AMC and GameStop. It's the same repetitive shit that they're spewing out, because in reality, folks, they don't know what the hell is going on. Some of them have only been investing or trading for maybe a year. Couple of them have admitted it. But yet, some of them are comical to watch. There's no doubt that, they're intelligent people. But, what are they really doing for you? You're really not learning about investing. You're just watching some guy with some charts and graphs, and, and they're following what has already happened. Is it going to help you? I doubt that. When you're involved in a short squeeze, there's not much that you're going to do. You're going to buy into your position, and you're going to wait. And it's a waiting game. So it doesn't take a rocket scientist to understand that. So what's the expression that they use? Buy and hold. Buy and hold. Well, folks, buy and hold in a squeeze is only going to go so far. Take into consideration who we are up against. I keep telling people that. You have to know your enemy better than anyone, or your adversary. And at this point in time, there are several adversaries in AMC. Citadel is not the main hedge fund that is shorting AMC. Simplex and Susquehanna are the two biggest short sellers of AMC. Where do they come in? Oh, I don't know, man. We'll soon find out. But what the problem is the market makers, specifically Citadel, they are the ones that are manipulating the price action. If they would just suspend dark pool activity for 1 week, within a few days, the MOAS would happen. It would go through the roof, and it will bankrupt a whole shitload of companies, including Citadel. Citadel will not be able to survive. Citadel hedge fund, gone. All their gains for 2021, out the door. Citadel market maker, done. Finished. And then, you still have the factor of the naked shorting. Oh boy. So who is going to pay all of that money? Let's just say, for instance, that hypothetical figure that there is 1 billion naked shorts out there. Who's going to cover those? How long is it going to take to cover those? So, you see there's a lot of complexity to this particular short squeeze. This is really not your normal average squeeze. It's very unusual because it involves a hedge fund who is also a market maker. And a market maker could easily manipulate a stock's price action with a blink of an eye using today's technology. Okay, so a lot of people have said that, these, the shorts have to cover, blah, 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 blah. Well, look, folks, I pay attention to what's happening every minute of every day. Let me show you guys something. We're going to go into AMC. And we're going to take a look. And I've been watching this very, very carefully. Okay. A lot of the short selling, that goes all the way back. I'm not going to bother with that. Here's the rock bottom level, about $1.91. Okay. And once you start to get a little closer, and we're using the daily chart here. Once you start to get a little closer and you kind of zoom in, you can easily, I could easily spot the manipulation. Okay. And it is a very, very common algorithm that's used. It's a buy, sell, and short the stock. Buy, sell, and short the stock. It is a continuous pattern. Now, a lot of things are going to change in the course of the algorithm's movement day to day. Okay, but there are things that that I've noticed that other people on YouTube and Twitter, I don't know where they're really coming up with their philosophies about what is happening. This huge run up on June 2nd, okay, a lot of these YouTubers and others will say that, the apes came in and they bought the stock. And that's what caused that huge run up to $72.62 that day. But in actuality, folks, these hedge funds, they should have stopped shorting AMC back in late March, early April. Definitely they should have stopped in May, but they didn't, and they got caught. And what you're seeing here, this price movement here, 100 volume, 111 million, 206 million, 375 million shares, 697 million shares. Here was a sell, 657 million, 477 million, and then bingo, 757 million shares in this volume candle. Do you actually think that that volume in that candle on that day at this specific period of time was produced by people buying AMC in a retail manner? I don't think so. Okay, what you're looking at there is the possibility of some retail sales, but the majority of what you're seeing is shorts being covered. That's what that is. Because think about it. That is a massive amount of volume that just poured in. So they did cover. And they do periodically cover their shorts. And you do see it in some of the price action. Now, right after this small squeeze occurred on that day, on June 2nd, you start going into some drops here. Right here, this candle, 589 million. The next candle, 326 million. Okay, so that is typical, is right after you cover your shorts, you're also going to start going into, well, some of the other institutions probably sold off for some profit. But you're going to go right back into shorting this stock immediately. And I can go through all of these candles with you time and time again. And you can see very clearly they'll short the stock, they'll cover their ass, and you'll see that. You'll see that in these larger green candles. 143 million on this green candle. 167 million. Okay, folks, these are not people coming in and buying that amount of stock. I'm sorry, but it's just reality. Same thing is going to occur here. You're going to see shorting right here. These four candles, short, then some sell-off, and then cover right here. Same thing occurs over and over and over and over again. You could start to break this down by the hour. Let's get rid of the extended hours. When you start breaking it down by the hour, then you could really start to see how the fuckery is playing out. On this day, right here, August 24th, beautiful run-up. There was a nice run-up right there. Do you actually think that these run-ups right here were apes, are AMC apes, buying these shares? Or was it a short position that covered? Okay, so there are short positions that are being covered, and that will constitute some of these run-ups. 46 million shares in this candle. 93 million in that volume of that candle. 22 million. 72 million. And it ran it up to 48.30. But once it hit that 48.30, what happens? Short position. Short position. Small consolidation right here. Cover the shorts. 33 million. Cover the shorts. 8 million, cover the shorts, 18 million, back and forth. Okay, this is what we've been seeing in AMC, and any stock that is heavily shorted like this, these are the patterns that you will see. And as time goes on, and you become an avid investor, and you know what to look for, and you know how to read these charts, and you know the technology behind the scenes, meaning the high-speed, high-frequency trading algorithms, the use of the dark pools, these hedge funds. You could see this right here. Huge short position, huge short position, huge short position. And what did it do? It just stepped the stock all the way down from the 52.79 that it was at, and it pushed it all the way down to where we are now at, we closed yesterday at 36.99. You can break this down even more. You get into a 30-minute chart. And you could start to go back in time and just pick these things apart. Short positions covered. Boom, boom, boom. Short position, short position, short position. I mean, that's all that they're doing. And I would probably say that a large portion of what we're seeing, I would say probably, I don't know, I would have to say probably sometime in April, May is when, the real short positions, naked shorting really started to occur terribly. And I mean, this is where they're at right now. Let me get these lines out of here. So we could go down to the 1 minute candles for yesterday. I mean, just absolutely horrendous. Now, again, yesterday, here was a short position that was covered right there. Now, taking into consideration that the market maker does have to start filtering in sales, AMC buy orders from the day before, those will get filtered in. But normally, they'll get filtered in between these short positions. But this in no way in hell, this movement right there, no way in hell that was an organic movement in the stock. That was 8 minutes, a run-up of 8 minutes from 37.25 to 37.86. Nothing. It hardly moved anything because all of the short position pressure behind it. I mean, it really made no damn difference. And then what did they do? Well, there you go. There was the onslaught from 38.04 all the way down to 36. It was at 36.88. Short recovery back to 36.99. They did their job. They kept the stock under $40. So, unfortunately, this is the position that we're in. And I don't foresee anything changing anytime soon. However, since we are getting into October, there does seem to be some sort of a quarterly pattern that I've noticed and a few others have noticed. There may be an opportunity coming up in October where this short squeeze does literally happen. And it's not going to be some like real instantaneous ordeal. We may start to see these pretty good run-ups. Once we start to see the first 2 or 3 in a row, well, that's it. But they will start shutting down the trading. They will start suspending the trading, right in front of your eyes. I don't know what Robinhood's going to do. I am not a member of Robinhood. I'm not even a member of Webull. I just like using their charts. All my money is wrapped up in Fidelity. And I do have an exit strategy set up. And I do believe that we are going to probably have some difficulties as this short squeeze occurs. Just my opinion. But anyways, folks, we're going to be getting close to the opening. I have some work that I have to do beforehand. And again, if any of you folks watch this playback, take everything that I've said into consideration. Okay? Follow me on Twitter. Jump into the Discord, and we could start to have some open verbal conversations on Discord, because it's a great, video chat and voice chat features. Both links are in the description box for my Twitter and Discord. And make sure you subscribe to this YouTube channel. And each and every day, I'll try to bring some pre-market advice to what's actually happening. Just some enlightenment. But I think we're on the verge of the short squeeze. I don't think it's going to happen really anytime soon, like within the next couple of days or the next week. But again, folks, like I always say, this is the stock market. Okay? Anything can happen at any time. This is Scott Cione, your Stonk Trader. Good luck today, folks. Take care.